This morning, we have the august presence of the Chairperson Securities and Exchange Board of India, SEBI. We have with us none other than Srimati Madhabi Puri Buch. And we have her august presence, so it's only befitting that we get the session started in her esteemed presence. But to spearhead the session, we also have with us none other than Mr. Srinivas Jain, Executive Director and Head of Strategy, SBI Mutual Fund. So let's put our hands together, and please help me welcome on stage Mr. Srinivas Jain and Srimati Madhabi Puri Buch. I think we can have the louder round of applause. We're talking about two dynamic leaders over here. So let's bring the dynamic round of applause, ladies and gentlemen. Over to you, sir.
Good morning, everyone. I hope you're having a very enriching day. Global Fintech Festival yesterday, day one, was just amazing. It's remarkable. It was filled with lots of discussion from thought leaders. We started the day with, Mr. Damu Ravi, Secretary Economic Affairs, Ministry of External Affairs. The session was more about how do you take India to the world, stacks to the world. Then we had our keynote speaker, Mr. Christopher Waller, member of Federal Reserve Board of Governors of US. And then, of course, we had a very interesting session by Nandan Nilekani in the second half on Finternet and how we can reimagine finance in the new world. The day culminated with Governor Reserve Bank of India, Shaktikanta Das sir, talking about fintech innovations of India at 100. We also saw some very interesting NPCI product launches yesterday, 2 of them. Throughout the day, we had the privilege of hosting multiple bankers, fintech founders, CTOs, and other industry leaders with various keynotes, panel discussions, and one-to-one sessions. Today, we are extremely grateful to have SEBI and market-related sessions starting today. In fact, SEBI has been a big initiative. SEBI this year has taken wholehearted support for GFF. We have multiple whole-time members, executive directors talking about various initiatives, especially we are talking their dedicated session on bond platform, distributed-related technologies, depository settlements, and of course, mutual funds, innovation, and investor awareness sessions. These sessions actually truly talks about how SEBI is committed toward fostering a transparent, efficient, and inclusive financial system. Today, it's my distinct honor to welcome Chairperson of SEBI, Madhabi Puri Buch. She's here to talk about the policy frameworks that are significantly improving. The keynote session from her is about role of fintech in ease of doing business. Welcome, ma'am. Ma'am is going to make a presentation today. Just before she starts off, I want to tell her how she's passionate about technology. This is her third visit to GFF. Last 2 years, she's talked a lot. In fact, a lot of policy frameworks have come as part of this discussion and post this discussion. It also talks about her passion of ease of doing business, and she's been very committed about that. And her passion towards using technology to simplify users and users' experience. Today, her talk is about fintech and how fintech can change and what policy frameworks is required for her, for us per se as a fintech industry to look at. So welcome, ma'am. Thank you very much. We'll start off with your presentation. If you can load ma'am's presentation, please. Thank you.
Very good morning to each one of you. It's a pleasure to be here today. As he very graciously said, yes, technology is certainly a passion of mine, and so is the markets. So in putting both of them together, it is my honor to be talking today about the role of fintech in ease of doing business. We'll just wait for the presentation to go up. There it is. So the first thing is, how do we as a regulator look at ease of doing business, right? And it's very simple. When there is complexity, when there are tangles, when you don't know quite how to untangle things, business is hard. The same multiple facets of a business, when they're woven into a strong rope, they still have multiple facets. It's not that you take away any of the colors which are there on the left, but it's just that you weave them in a way that makes it simple and, more importantly, strong. So every aspect of business and compliance continues, but it has to be made easy. It has to be made strong. Now, what really is the role of regulation? Why is there compliance in the first place? Why can business not do without any regulations? Why can it not do without any compliances? The reason is simple, that in a social environment, in an economy where rights of the consumer and of the investor are to be protected, there is an imbalance of power between large corporations and institutions and the small investor and consumer. So the role of the regulator, the role of regulations, the role of compliance is really to give protection to the consumer or to the investor in the case of markets. Equally, on the business side, regulations and compliance are important because they foster trust in the system. We have seen this repeatedly. I think the most recent evidence of this is that when SEBI launched a concept called small and medium REITs, we saw that the response from the industry was very, very positive. They wanted to be regulated. They were operating in an unregulated environment, and they were suffering from the fact that investors did not have faith and trust in their products and services because it was unregulated. They weren't sure that the offerers, the organizations will follow any rules. So when we proposed that we will bring a framework for small and medium REITs, the industry actually came forward and said, we would like to be regulated, we would like compliances, because that is what will foster trust in the system and will facilitate growth. So compliance is important not just for the investor, but also for the business. Both of them benefit from the requirement of protection of the consumer. Now, when we talk about compliances, there are two aspects to it. And when we say ease of doing business, there are two aspects to it. The first is running the business itself. How easy is it to run the business? And the second is, how easy is it to comply with the rules and regulations? In terms of business, the first and foremost that any entity asks the question, and particularly fintechs, saying, am I allowed to do this or am I not? It's a yes-no question. Now, where does innovation come? Innovation usually comes at the boundaries of the yes and no. That is why it is innovative. If everything was clearly in the yes and clearly in the no, there would be no innovation. So when innovation comes, it's usually in the gray areas between yes and no. And the important thing is what guides a regulator, that which out of those grays are light gray and can be moved to white, and which of those are dark gray and must be banned. So the principles that we as regulators follow is actually very simple. So when a lot of investors ask me this question, that when they invest in fintechs, what should they expect as regulatory action? My answer is very simple. If you are doing something which is enhancing the well-being of the consumer, 9 out of 10 times, the regulator will say yes. They may put some belts and suspenders to protect. They may put compliances of reporting to monitor. But 9 times out of 10, they will say yes. But when the innovation treads the line where the consumer, or in our case, the investor, is being shortchanged, there is opacity, there is lack of concern about what is actually happening to the investor's money, those you can with reasonable probability assume that 9 times out of 10, the regulator will say no. So as you think about innovation, which will always be in the gray area, this is the metric that you need to assess, that are you doing good for the investor, or are you actually doing something which you yourself know is not in his long-term interest? One other important role for us as a regulator in terms of encouraging innovation, particularly in the fintech world, has been the creation of standards. Why is this? So what we find is that we have a market ecosystem which has a lot of infrastructure. Let's say the stock exchanges, the depositories, the clearing corporations, the mutual fund registrar and transfer agents. These are all the infrastructure on which other people build their innovative solutions. Now, if each of these is different and there is no standardization in the way in which their data and their APIs work, then the cost of innovation and the cost of a new fintech to come into our market system and integrate with this entire market infrastructure is very significant. So what we have been working on is to standardize. So whether you are talking to NSE, BSE or MCX, it should be the same file format so that your cost of innovation comes down. Whether you're talking to CDSL or NSDL, it should be the same API structure so that your cost of innovation comes down. So we've been working very hard at making sure that standardization happens in our market ecosystem to encourage low-cost innovation in terms of fintech. What we have seen over the last few years is that this approach has really delivered fabulous results. So whether it is the new regulation that we brought in terms of execution-only platforms for mutual funds or online platforms for bonds, or for instance, we've recently talked about, we had a consultation paper on performance validation agencies. We are now very soon going to be talking about some data benchmarking agencies. So we find that this entire ecosystem is growing from strength to strength. So what started as highly technology-oriented exchanges, clearing corporations, and depositories moved on to large fintechs in the broking space, now in terms of the mutual fund space, now in terms of the bond space, and further into the alternate asset classes. So this innovation is now moving at huge speed, and we are really, really encouraged by the speed of uptake of the consumers in doing this. The second area of ease of doing business is what SEBI itself does internally. So we have been focusing on saying that if the fintech industry has reached a certain level of maturity and now they want to IPO, the private equity investors want to exit, the markets are good, this is the time when we should not be wasting time in giving approvals. So if you see the chart, we've been tracking this for the last roughly 12 quarters. We track this very, very carefully to ensure that the aging and pendency of IPO applications, pendency is a good thing because it means there's more and more activity in the market, but aging, we keep a hawk's eye on this. So as you're seeing, compared to when we started tracking in March of 2022, and we had a very large number of IPO papers pending more than 3 months, today we have just 8, and most of those are really in the realm of where there is either a judicial intervention or there is a regulatory approval pending from another fellow regulator, and which is why they are still pending at our end. So this effort on our part will continue, that we need to facilitate that SEBI does everything it can to speed up approvals. Similarly, in terms of actual participation in the market, so this is for stockbrokers, DPs, investment advisors, research analysts, RTAs. Again, you can see that the objective is to bring down the aging and ensure that there are very, very few people, in fact, even crossing the 1-month period. And this is end to end, from the date of first application. In SEBI, we don't count it from what generally is considered in bureaucratic circles as from the last date of receipt of all information, because that has a big loophole that if an officer is not being able to conclude his work, he simply asks another question and his clock gets reset, right? So we don't allow that in SEBI. We track this from the date of first application, and we ensure that people are not wanting and waiting for approvals when there is so much opportunity in the market. So any of the fintechs coming to register in this form will also see that this speed of approval should be there by SEBI. This speed and this monitoring of aging is something that we've been doing more through restructuring of the organization and through process optimization. But now we have about almost a dozen projects using AI, which are in the works in SEBI. Half of those, roughly speaking, are ones which will speed up our approval process, and half of them, roughly, are the ones that will speed up our supervision process. So we are hoping that, in fact, a lot of that aging that you saw, we can make it crash even further, because we will now actively use AI within SEBI itself in order to deliver this. Moving on to the issue of, so this part was all about how we are working towards making business easier for fintechs and businesses in general. The second area of how to make compliance easier, right? That's equally important. So what we had done was we had actually put in place 16 different working groups to work on ease of doing business, which really means ease of compliance. Now, we got 317 recommendations from various people, and we are at various stages of implementation. 71% of those recommendations have been accepted by SEBI. Some of them already implemented, some are to be taken up in the month of September and so on, but 70% roughly have been accepted. 10% not accepted because they are not consistent with certain core principles that the regulator cherishes. And another 20%, roughly speaking, is under process. We have not yet reached a conclusion on whether to go ahead and how to go ahead. So this is a very active initiative on our part across the entire ecosystem, that we want feedback from the ecosystem to say how and what will make your life easier so that you can focus on the business and deliver to the country rather than being caught up in compliances. We also do a lot of consultation before we come up with compliance requirements. Before we issue circulars and regulations, we do very extensive consultation. A lot of people have asked us that, how do you cope with this load of consultation? Because, every third day there's a new consultation paper from SEBI. So just to share with you, it's completely automated. So the way in which that feedback is also processed is completely automated, so that the day the consultation period ends, we get all of these charts, we get all the feedback, and we only have to apply our mind to saying, okay, if the bulk of the feedback is in the areas of A, B, C, D, whether we agree, partly agree, or disagree, and how do we want to change our proposal. So this adoption of technology has allowed us to do far more extensive consultation. And for instance, when we did a recent consultation paper on F&O, we have some 6,000 responses. Now imagine if we had tried to do this manually, we would have died. But since it's all automated, we are really able to collate it very speedily and assess as to what is it that the market is giving us feedback in terms of the nature of compliances that we should have in the first place. The third area where we are now putting a lot of effort is to ensure that all of our market infrastructure institutions are adopting APIs 100%. Because naturally the whole system of file upload, file download, etc. has so many limitations in terms of just ease of doing what you need to do. And it's also vulnerable to errors and so on. So working this along with the standardization, working on APIs and saying everything will be API enabled so that the fintech industry can really leverage the entire infrastructure of the market ecosystem. A lot of the reporting has been converted to XBRL reporting, and I'm very happy to see that some of the industry associations, I understand FICCI has developed a system for its members. 25 reports have been automated, and almost over 100 companies have already adopted that system in order to facilitate ease of compliance and ease of reporting by listed companies. So all of this is moving in the direction of saying that companies should have an ability to really have real-time controls in place. That's an important role of fintechs, to assist the B2B type of fintechs, not the B2C kind of fintechs, to facilitate that there are real-time controls within an organization, and there is reporting which is automated, so that literally compliance becomes just a low hum in the background of every organization. This is our ultimate objective in SEBI. That for every entity that we regulate, compliance should simply be a low hum which goes on in the background. It's like, you know, each one of us are just breathing, right? We're not having to think about breathing. We're just breathing. There is an in, there is an out, there is an in, there is an out. And that the real capability of our entrepreneurs, of our industrialists, of our entire economy is really focused on growing the country and growing and delivering services to its citizens. Compliance should just become this low hum in the background. Thank you.
Thank you very much, ma'am. I think it said it all. Compliance should be the low hum in the background. And I'm hoping all of us, including market participants like that, are waiting for a day when that actually becomes a low hum. But really appreciate the kind of efforts the regulator is putting to not only look at innovation, but also make compliance easier with all the technology initiative. Let us put a big hand of applause to ma'am for this keynote address. And thank you very much for coming today, ma'am. Thank you very much.